Thank you for tuning in and welcome back, team. In today's episode of Real Estate Investing, we'll talk about investor niches and strategies. In part 2 of the Real Estate Investing series, you learned about investor education. So today we're going to take a look at very common and very easy to apply strategies and niches that help you define the path that you wish to take with your real estate investing career. My name is Andrew Finney. Please consider me your real estate geek. I'm always here to help. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below. If you haven't already done so, please go ahead and subscribe to this channel now and like this video. Okay, team, let's talk about this. So after the last episode in part 2, you learned a lot more about investor education and where to begin. Now we're going to talk about defining a path before we get into part 4, which will actually be creating a business plan. We can't create the business plan until we know the path and the trajectory that you wish to take. Armed with the education that you learned in part 2, let's go ahead and start reviewing the different investing strategies and niches that you can explore as you define your way in your real estate investing career, okay? So in this video, we're actually going to take a look at seven things. We're going to take a look at why real estate investing is a lot like a mixed bag of nuts. We're going to talk about choosing your niche, and then we're going to talk about different real estate investing strategies, from the buy and hold to the flipping to the wholesaling, and then as the last point, a little bit more about what's to come in part 4. So the first thing is real estate investing is a bit like a mixed bag of nuts. There's so many different options out there, essentially. I mean, if you open up a bag of nuts, you're going to have cashews, you're going to have peanuts, you're going to have all kinds of different macadamia nuts. I mean, you're going to have all kinds of different nuts. And whenever I'm talking about real estate investing being a mixed bag of nuts, I'm not talking necessarily about people that you might come in contact with, in as much as how many different types of properties and ways there are to explore your niche and explore your strategies. There's so many different options, and it's going to be really exciting to see which one of these that you choose. And please definitely, as we continue the series, tell us what you're doing and what you're gaining from these videos in the comment section below. Help our community learn and grow. So the big difference, obviously, with a mixed bag of nuts and real estate is this one is going to cost you some money. There's going to be a lot of people out there, a lot of real estate gurus that tell you that you can get into real estate investing with little to no money out of your pocket. That is certainly true as one of the options of the real estate market and of real estate investing areas. At the same time, there are trade-offs that you need to be aware of and exactly how that works. So let's start talking about your different niches. In choosing your different niches, you have 10 opportunities to pursue. You can go look at raw land. When we're talking about raw land, well, that's essentially an unimproved piece of dirt. And with that, sometimes people will buy that to build a commercial property, to develop it out with residential properties, or simply to buy and hold the land with speculation purposes that with the city growth going in around the area, they believe that the land will be worth more money in the future. That's actually niche number 1. Niche number 2 is the more common and what a lot of people get into, which is single family homes. So with single family homes is obviously going to be one of the most popular types. You can also see this denoted a lot of times as SFR, which just simply means single family residence. The third niche that you might want to explore are duplex, triplex, and quads. So with duplex, triplex, and quads, they're still considered residential property. When you get into properties that exceed 5 units in a structure, then you're starting to get into commercial property, which is still another option for you. However, if you want to stay in the residential side, it needs to be 4 units or less as you look at that. Now, what's pretty interesting about this is this could be an absolute genius way to get into real estate investing if you're younger in life, or maybe you're at the point in your life where you can actually go get an FHA loan or a VA loan. A lot of people don't know that you can use an FHA loan or a VA loan to buy a duplex, triplex, or quadplex. The only caveat on that is that you have to live in one of those residences because they're primary owner-occupant type loans. At the same time, you live in that residence for 2 to 3 years, and now you have yourself an investment property that you can have for the rest of your life with a passive income coming in the form of rent. And you used your own primary owner-occupant home loan through FHA or VA to get started. This is is one of the most genius ways to get into real estate investing if you have that option. So then the fourth niche that you have are actually small apartments. Now, there's no clear line in the sand as what people will call a small apartment. They generally will look at it from maybe as low as 5 units up to about 50 units or so. And anything over 50 units, they start considering more of the larger apartments. But 5 to 50, I mean, that's pretty big difference when you start talking about apartments. Now, there can be extremely lucrative if you own an apartment structure, especially let's say they have like 20, 30 units. That's 20 to 30 rents that you're getting every single month. The trade-off on this is going to be higher end on the management side for you. It's going to be more intensive and making sure that the structures are taken care of, making sure that the landscape is taken care of, making sure you have employees on staff from groundskeep to leasing agents and such to address any issues that might pop up. So, I mean, they're a little bit more intensive on the management side. At the same time, if you have the ability to purchase them, they can be a very lucrative deal. A lot of people might actually form what's called a real estate investment trust to purchase these as well, and we'll get into that in a moment. As a different whole, its own niche. So then we move on to the next niche that you have, which is actually large apartments. So going back to the small apartments, whenever we're talking about 5 to 50 units, consider that a large apartment could be anything over 51 units, anything over 50 units, right? So 51 and up could be a large apartment that you could get yourself into. So they're complexes that you see across the country. They often include pools, they often include workout rooms, full-time staff, high advertising budgets, as you've probably seen. Depending on what city you live in or what area of the country you live in, you probably have these in your city, and you have seen them quite frequently. So they can cost millions and millions of dollars to purchase and can produce stable returns with minimal personal involvement because it's such a big enterprise. It's just like running a business and working your way up the totem pole, so to speak. So large apartments, many of the large apartments are actually owned by what's called a syndication. A syndication is a small group of investors who pool their resources to buy the large apartment together. Now that's going to take us into the next niche opportunity that you have, which is REIT. And REIT stands for Real Estate Investment Trust. In its simplest form, and probably one of the easiest ways to define or describe a real estate investment trust, is essentially a real estate property is like a mutual fund on the stock market. So, I mean, that's essentially the easiest way. REIT is to a real estate property as a mutual fund is to a stock. So a large number of investors and individuals pool their funds together, forming the real estate investment trust, and allow the real estate investment trust to purchase large real estate investments. Some of those investments could be like shopping malls, large apartment complexes, skyscrapers, bulk amounts of single family homes. And then what happens is the real estate investment trust turns around and distributes the profits to the individual investors. Now, this is one of the most hands-off approaches into real estate investing, and it's going to be one of the lower barrier of entries, financially speaking at least, getting into real estate investing. I mean, this is as simple as going on to mutual funds and going on the Scottrade or something like that, or whatever your favorite trading platform, TD, Ameritrade, or whatever your favorite platform is, and looking for a real estate investment trust and simply finding how much it costs and putting some money in there. I mean, that's how simple this is. So obviously your return isn't probably going to be the magnificent amount of money that you would love to see. At the same time, it is a way to get into real estate investing, and it is a good option to your overall portfolio to add into it. So generally the dividends that are paid out on real estate investment trust are pretty good. So they're relatively high compared to the rest. Your next niche is actually the commercial properties we were talking about a moment ago, right? So commercial investments vary dramatically. I mean, there's so many different types, and they're going to vary in the size, the style, the purpose, they ultimately involve a property that is leased to a business. So when you see like business structures up and you have businesses operating out of like a strip mall, or you have businesses operating out of these office structures that come up, right? That is a commercial property being leased to a business for the use of their business within the structure. So a commercial investment would be one like you own that structure, and now the tenants are actually businesses as opposed to individuals in the single family or the duplexes or apartment worlds, right? So it's pretty cool because if you have businesses that are going to be your tenants, then there's a little bit of predictability and reliability there, so long as all the terms and conditions are met on the contract that you agreed to provide to those businesses, and those businesses continue to grow and thrive. So they're pretty interesting things. Others that could an example of this, actually, I was just thinking of an even easier way to explain this before we go into the next one, is like your local supermarket, like maybe even a Walmart. If they don't own the land or the structure, an investor could have gone in there going back to point one, bought raw land, decided they were going to use it for commercial development, and built the structures where you might get Targets, Walmarts, supermarkets, big box mega stores like a Best Buy, a Costco, stuff like that. And they actually put them into this business park of sorts, right? Into this area of shopping centers, right? And that could be a very, very, very lucrative way to get into. Obviously, they're very, very, very expensive to get into, so it's gonna take different strategies. Commercial real estate isn't exactly recommended for beginners in real estate investing, so it's one of those things that you can graduate to once you get your business plan and your niches and your strategies down underneath you, so that you can go ahead and grow up to that as you continue to learn more about real estate investing. The next option is like mobile homes. You can actually invest in the mobile homes and rent those out, or you can actually own the mobile home part. Pretty self-explanatory there. There's different options there because a mobile home is not technically real estate unless that mobile home is affixed to the ground. In other words, you can't back up your truck to it and drive it off to a new location. If you can back up a truck to a mobile home and drive it off to a new location because it has wheels on it, then that's not going to be considered real estate, okay? But at the same time, there still are opportunity for you to perhaps buy mobile homes and a rental park, going back to the land again and intended purposes. There's so many variations of what you could do here. If you bought the land and you designed it to be a mobile home park, right? You could buy the mobile homes, put them on there, and then get yourself some renters in there. Here in Las Vegas, Nevada, I know of about 3 or 4 different mobile home parks across the city where they do just that. I mean, they're not technically real estate, but they're mobile homes. And they have, some of them cater to the different niches, from age-restricted communities to just affordable housing for others. So there's a lot of opportunity in the mobile home world. Don't knock it. It might be a low-cost entry for you to get into as you graduate up from maybe your single-family homes or your duplex, triplex, quads, and you get some more money with you to go ahead and buy that land to do that. Okay, so then let's move on to another niche. Now, the next couple niches are extremely intriguing. So they're actually investing, one of them is investing into tax liens. So when you invest in tax liens, the way that works is if a homeowner doesn't pay their taxes, the government, specifically the local, state, or federal government, can and will foreclose and resell that property to investors, and takes cash in this game, can and will resell that property to investors for the amount of taxes owed. So that means that it can actually be incredibly inexpensive to buy properties. But before you do, you always want to do your due diligence. It's extremely important to always perform your due diligence on the properties and not just jump into that kind of investing like it's a shiny quarter and an ostrich eating the shiny quarter. You need to know what you're doing, because tax lien sales are complicated, and transactions, they are transactions that require research. You're going to need additional knowledge, and you need additional experience. At the same time, it can be a very lucrative niche into the real estate investing world. Now, the 10th niche that we're talking about in this episode today are notes. And this is where it gets interesting too. So these last two options are extremely fascinating as far as a method of getting the real estate investing. So when you invest in notes, what it typically involves the buying and selling of paper. So if we had a piece of paper, right, it'd be like you bought and sold it. So that becomes the mortgage note. Whenever a buyer closes on a home, they get this note, right? So what happens is when a home is purchased with a loan, that note is created, and within that note, it explains the terms of the contract. So like if an apartment owner decides to sell their property for $1 million, let's say, then he offers to carry the note to the incoming buyer. Then that allows a new buyer to avoid using a bank loan. And when you're talking about commercial property, you're talking about commercial lending, not residential lending. And there's entirely different rules, by the way, on that, just as a side point. So they could carry that note. But now let's say that maybe the seller decides that they don't want to be involved with the property. They completely want to cash out of the property, right? Then that's where this note's really going to come into play in the buying and selling of notes. So what happens is it's called to a note buyer, right? And it's typically, if a seller wants to sell the note to a note buyer, what's going to happen is the seller will make concessions on the price of that note to go ahead and sell it. If they're properly motivated, they will be selling it at a discount to the seller, to the incoming buyer, so that the note buyer will then begin collecting the monthly mortgage payments on that property, right? And also will have the right to keep the note or sell it again in the future if they decide to. So notes are definitely an option. So those were 10 different niches that you can get in the real estate investing. And I hope that you learned some different avenues and just how many different opportunities you have to get into real estate investing just out of those 10 niches alone. So there's a lot of different things people don't always consider with real estate investing, and that's why I was saying in point one, it's really like a mixed bag of nuts. There's just so many different options to do it. It's just about discovering the option that's going to be right for you, and that's what we're talking about in today's video, is identifying the niches and the strategies available to you so that you can choose the course that's most comfortable and practical to your real estate investing overall plan and stratagem. This is where you begin taking a thought and an idea and you begin forming a game plan. And that's what's going to take us into part 4 in the next episode about creating a business plan. So let's go ahead and now move into the next third major point of this episode, which is choosing your real estate investing strategy. So when you choose your real estate investing strategy, you essentially have 3 very common investing strategies. Number one is probably the most common, buy and hold, right? Buy and hold strategy. The second one is flipping, which is obviously a pretty common one. And then the third one is wholesaling. So when you were talking about earlier in this video about real estate gurus or people that you pay thousands of dollars to go see in a seminar or whatever, that can tell you that you get into real estate investing with no money out of your pocket, you'll never have to put a penny in, blah, 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 blah. It's not that easy. They're actually referring to the wholesaling segment, and it very rarely works out like they say it does unless you're in a highly, 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 highly depressed market. We'll have to go into that a little bit more in a moment. So with the first one, with buy and hold, is typically what you think of. You buy a single family residence, or you buy any of the 10 niches that we talked about, and you're going to hold it, you're going to buy it, and you're going to hold it, and you're going to lease it out with a long-term vision of return through the dividend. Consider your monthly rental income like a dividend that's being paid on that property, with the principal balance being that of the home's market value or the property's market value. So that buy and hold strategy is going to benefit you in 2 ways. It's going to benefit you in the form of that monthly passive income coming in, or the dividend, right? And it's also going to benefit you that as the market appreciates over time, you're also going to be accruing more and more and more equity in that property at the same time as you pay it down lower, then you're going to have the opportunity to just keep that investment growing and growing and growing until such a point that you decide, oh, the market's at the peak, or it's coming up on the tipping point of the real estate market cycle, and we want to go ahead and cash out, sell it and cash out, right? Which is pretty common that people like to do, right? So it's really important that buy and hold investor understand how to evaluate the deals and opportunities, because a lot of people make mistakes in this area, and generally the mistakes are they buy bad deals because they simply don't understand appropriate property valuation. They underestimate the expenses. They make bad decisions whenever selecting tenants because they want to get a tenant in to cover the overhead so quickly, or they simply fail to manage the property correctly. And those mistakes can be avoided, and if you learn the business, if you just start learning the business and if making it this far in this video, pat yourself on the back, because you're definitely on the right track to learning the real estate business and real estate investing to keep you from making these mistakes. Because when you make those mistakes, if you make those mistakes, they can cost you financially, and sometimes they can even cost you legally if you really did something crazy, right? So to help you better understand how to properly execute a buy and hold strategy, you should learn to identify the ebbs and flow of a market. So you need to know how the market cycle works. So I'm going to give you an idea of exactly, in a very, very basic form, to keep it simple, right, of a real estate market cycle. Let's say that point 1 is the bottom. So the bottom of the market means that prices have bottomed out, and then it's caused investors to go in and start purchasing as much of the excess inventory as possible. Deals are plentiful and cash flow is an all-time high, right? So that's generally whenever, if you're talking about wholesaling properties, that's generally where the wholesaling property market's going to be the most popular. And that's whenever you hear of success stories, that's normally what you're hearing about is in the bottom of the market. Then there's the climb. So the confidence among home buyers improves. Lending gets a little bit easier, or the lenders make it a little bit easier for buyers to get home loans, and buyers are feeling more confident in the market, so they begin purchasing property, which leads to more sales, decreases the inventory, and increases the price of homes, which then takes you into the real estate cycle number 3, which is when you're starting to reach the peak, whenever prices are at an all-time high, inventories are very, very low, and multiple offers are common, and some of those multiple offers even keep coming in above the list price because buyers are desperately trying to win the bidding war, right? Then that leads you into the fourth point whenever you start getting to the tipping point. At the tipping point is when you see in the market when prices begin to fall. They compensate for the overbuilding of new home construction and high prices of resale inventory and the new construction combined. The foreclosure rate begins to increase as homeowners cannot sell their home because they owe more than their home is worth. So that tipping point then takes you down to like a decline. And then the decline is when you see prices continue to fall, foreclosures just flood the market, short sales start flooding the market, and there are more and more of those things going on. That's another opportunity. And the decline in the bottom, you essentially have three phases for the wholesale as we're talking about this real estate market cycle to really get into it. It'll be on the decline, the bottom is really where you really want to be, and then on the climb, and then leave the peak and the tipping point alone. Because if you're trying to wholesale properties or you're trying to do investment properties when you're at the peak or the tipping point, then you're not going to be setting yourself up for long-term success there. But anyways, the decline is people are fearful of buying, which causes more inventory on the market. In other words, you got so many sellers out there and nobody's wanting to buy it. The buyers are scared. And when that happens, inventory increases in the market, and which drives the property prices down. That's what makes it lucrative and a great opportunity for investors. Then they start snapping them up, whether they're looking at buy and hold or whether they're looking at like wholesaling opportunities or possible flips. If you're going to get into flipping and you're looking at the decline or the bottom, then what you want to do is you would probably actually be extremely wise to work it into your business plan so that you buy the properties with the intent to do a buy and hold strategy so that you can wait for the climb and wait for the peak of the real estate market cycles to sell those properties as the flip at that time. So you would start them off as a rental, collect the income. You got the properties at all-time lows, and then when you cash in on the climb or the peak, then what's going to happen is you're going to be able to make a huge amount of money in the form of the equity gains from the low to the high, right? And then you would have had every single month passive income coming in the form of rental income. So I mean that would be pretty ideal there. Now the second very common strategy that people take is flipping. Again, flipping, it really depends on where you're at in the market. And I just have to try to dispel some myths here, because if you're watching this video, it's highly likely you watched a lot of other videos, especially to make it this far into the video. And you've probably heard like the 70% rule, right? Where essentially if you're going to invest in real estate, the flip, then you're going to buy it at 70% of the current value less the cost of renovations. So for easy math and illustration purposes, if you bought a house or the house in fair market value was worth like $100,000, then your offer right out of the gate is $70,000, right? But if it's going to cost $20,000 to fix that property, then your offer is really going to be $50,000. Here's the thing. When you're in the market, and if the market's on the climb or the peak or even the tipping point, right? So 3 areas of the 5 market cycles we identified in this video today, you're not going to have a lot of luck finding sellers that want to cut their price down essentially 50% under market, because it's just ludicrous. And if you're trying to wholesale properties whenever you're in the climb or the peak or the tipping point and you're trying to undercut the price for flipping purposes or trying to use a 70% rule or something, it is not going to be in your favor. I just want to be completely open and honest with you. That's why we explored the mixed bag of nuts that real estate investing can be, with the various ways to get into real estate investing. Now, a well put together portfolio may consist of a little bit of each of these, or ideally maybe one to 3 of these, depending on what your circumstances are. You need to focus and specialize on your niches. You can't be everything to everybody, nor can we know everything about everything to do with any of these, because each one of those 10 niches have a lot to learn, have a lot of things going into it. But when you're flipping property, I just really want to dispel that, because I have talked to many would-be investors about flipping properties, and they're telling me they want to offer like 50% under the market on that. I'm telling them, like, look, that's not going to happen. I mean, not even in the foreclosures on the market are doing that. We're lucky right now at different points in the market, depending on where you're at, when you're at the peak, or if you're even going into the tipping point, you're lucky if even the bank-owned properties will be sold at 3 to 5% under their list price, because it's such a tight inventory market. And a tight inventory market is not the time to be trying to play that game. Just being honest there. So essentially flipping can be lucrative. The idea of a flipper is is that they're going to buy a house at the lowest amount of money possible. They're going to renovate it for the lowest amount of possible, and then they're going to flip it out as quickly as possible, right? So that's the whole idea and premise of flipping. Now, with flipping, what makes it interesting is unlike doing a buy and hold strategy or having rental properties, what happens with flipping is it's very much an active day-to-day job. So, I mean, that's how you get paid. So if you're not flipping property, you're not getting paid, right? Whereas with buy and hold strategies, you're getting paid every single month by virtue of collecting the monthly rent. It's something to think about. It's something to consider as you chart your course forward. Now, that brings us into the third strategy that people take, and this is the one that is like the bane of my trusted real estate advisor existence in different ways. It's called wholesaling, and the reason that I say it's the bane of my existence is I cannot begin to count over just the last 5 years. I cannot begin to count the amount of would-be wholesalers or flippers that wanted to get into the market, or people that didn't understand the buy and hold strategy of real estate investing that wanted to get into the market. And then what they do is they sit there and they tell me how they're going to do all of this stuff. And because they just came out of a seminar, they're super fired up, they're super pumped up. And look, I honest to God want to help them. At the same time, I'm trying to share with them what those people and what those alleged real estate gurus are teaching, right? I'm trying to share with them, these are the market conditions. These are the market trends. If there's a deal to be had, it's going to be in this segment of the market more than likely, and this is what you can expect. And then they get dismayed and thinking, oh, well, I want the property less. Well, of course you do. You're buying it. And then other than being a buyer, I mean, I've never met a buyer that wants to pay more for a property than they have to begin with. But an investor mentality, well, we definitely know that you want everything pennies on the dollar. And sometimes that's practical. I mean, it's practical when you're going into a decline or the bottom of the market, right? So 2 phases out of the 5-phase real estate market cycle that I shared with you earlier in this video, those will be the times where you might be able to get things pennies on the dollars. That's where you're going to find open negotiations in terms of price, and that's where you're going to get the best deals for your wholesaling opportunities, whether it's buy and hold, whether it's flipping, whether it's what have you. That'll be the time to pick up those properties so that you can turn around and sell those properties or start flipping out those properties on the climb and the peak. So keep that in mind. But typically wholesalers are told they can get into real estate investing for no money down. That's because you're essentially working for free. You're working on a commission, and that commission that you're going to earn is that you're going to earn it from when you sell that property or you're actually going to not sell it. You're going to be finding the properties for retail investors or private investors, and they're going to pay you somewhere likely between $500 and $5,000 for your trouble. Depending on the size of the deal, it might be more, might be less. It just depends on the size of the deal. But that's typically that's how wholesalers make their money. Wholesalers sell their contracts to the retail buyers, so they get a contract. They're getting a contract on the property, but they're not putting any money of their own into the game. That's why the gurus say, hey, you can get into real estate investing with no money out of your pocket. Essentially, you're using someone else's money, being the retail investor or the private investor's money to purchase the property, and you're functioning as the middle person, the middleman, or the middle lady, if you prefer, on this whole transaction. So you put in the time, you put in the sweat equity, you put in the time to go out there and find these properties, put these deals together, package it up to the investors that actually have the cash, right? And then go back to the person that's selling the property, execute the transaction, and boom, that's wholesaling. So, a lot of people get into real estate, they'll get a real estate license to execute these transactions, and it's just kind of interesting to see how things play out for them. Now, that being said, I don't want to discourage you, because it is obviously a popular strategy that's taught by real estate gurus and often receives the most attention from real estate investing. People watching real estate investing videos, it does get the most attention. It's because somebody's selling you a dream, whereas I prefer to share the truth with you so that you can make your dreams a reality once you know what you're doing. At the same time, it is not as easy to become a successful real estate wholesaler as the gurus, as the people that you may have attended seminars or heard make it sound. It's just not the case, and that's just the honest God truth. If it was that easy, I would be a wholesaler and I'd be making millions of dollars myself, as opposed to being a trusted real estate advisor. I mean, I know the market extremely well. I got all the experiences with residential real estate, from condos, townhomes, single family homes. I've sold land. I have a lot of experience in this way. So if wholesaling was that beneficial, I'd be doing it. Just saying, right? And if I was doing that, then I'd be making videos on that to help you learn it as well. Right now, the market is not in a place at the time of this video that I'm making this in 2018. It's not at the place right now to be advantageous to a wholesaler, in my honest opinion, in my professional judgment. So, be careful whenever you're seeing that stuff being promoted, because they oftentimes tell you like zero money, and you ultimately will have and need to have some financial resources, because obviously to find those properties and to get those kind of properties that you've got to be able to put the deals together on, you're going to need the market, you're going to need software, you're going to need systems, you're going to have a way of managing everything so that you're able to move that transaction forward to close. So just keep that in mind as we move forward through this real estate investing series. Now, today, this has been a very, very in-depth video, very, very long, probably one of the longest videos I've made on my channel so far. That's all well and good, but what I'd like to know is what you're taking away from this video. Which one of these 7 categories that we were talking about today was most impactful to you? Was it the discovery, the realization rather, that the real estate market is actually like a mixed bag of nuts? Or perhaps was it the fact there are 10 different niches that you can start with to get into real estate investing? Choose 1 or 2 of them, no more than 3, but one to 3, okay? Or was it the reality of the wholesaling world and the way that the real estate market cycle works? Tell us what you took away from this video in the comment section below. Now, I'm going to pop up my contact information. If you need help finding a top agent where you live, or if you simply want to drop me a line to say hello, my contact info is below and on the screen. So if you haven't already done so, I'm going to ask you to do 3 things. Number 1, please subscribe to this channel. Number 2, please like this video. And number 3, please share this video around with someone you know is going to be able to help. I really appreciate you hanging in there today, team, with this extensive video about real estate investing, especially going over the different types of niches and strategies available to you. If you'd like to go back now to investor education and go ahead and check it out, then please feel free to go back. I'm putting it up right now. And if you want to move forward to creating your business plan, it's also available to you. In between now and next time, I'm wishing you and yours a lifetime full of love, wealth, abundance, and happiness. Make it a wonderful day.